Earlier this week, 390 odd billion pounds into COVID in terms of government borrowings, financial and business support for the SMEs, individuals and large companies. Mr. Rishi Sunak stood up in Parliament, having delayed his budget from the autumn of last year, and stood up and announced what was going to happen, what he's proposing to happen in the landscape in the UK for the next year, and also what was going to happen over the next few years. Hi folks, my name is Mahmood. I'm an accountant of 26 years plus in practice. I've been qualified for more years than that, working in multiple sectors and businesses here, and I'm here to share some news about what the budget meant. I'm not going to repeat the whole 160 plus pages of the budget report. I'm going to focus on what does it mean for SMEs, what does it mean for companies, what does it mean for us in terms of what we get to take home, and that's what I'm going to try and distill down. If you've got comments to make, questions to ask, by all means, chuck them into the comments box, put your old hashtag replay on there. I'll pick those comments up later on and reply to them accordingly. So before we explore what's going to go in here, in terms of what we're trying to do here is to share in sort of more accessible, easy, less BS, not technical language here about what the budget actually means. I'm sure all of you have read a lot of the headlines. I'm sure your heads are getting a bit sort of crammed of budget news. There's a few things I'm going to talk about as far as the budget is, and just give you some heads up about the future, well, business and tax landscape, what Hmrc have got up their sleeves going forward. These aren't going to happen immediately, but they're certainly going to affect us as business owners, entrepreneurs, solopreneurs, whatever you want to call yourself, and therefore we need to be aware of those in the horizon. So what are we going to actually look at today? So if this works, this is what I'm going to cover as far as this session is concerned. I'm sure you're very impressed by the wonderful graphics. So there is an overview just in terms of the context of the budget. We know obviously the circumstances. It's not a great dramatic shock to the system, is it? That COVID was going to be the framework in which the budget was presented. As I said, from around about, I remember the last budget last year, when COVID was actually becoming more of an impact in February, March time, in terms of when Rishi stood up first time around and made those announcements about what he was going to do to support businesses, to support employees, to support employers. That particular scheme we're going to have a look at again, called Furlough. There have been some changes, but largely some of the technical rules still stay the same. We're going to look at grants, and obviously grants as opposed to loans are ways that individual self-employed people, as well as employers, as well as corporates, and there's some grants that are distributed by central government and Hmrc, and some grants that are distributed by local authority. It was pleasing, albeit there are still some people who slip through the cracks. It was pleasing that when it comes to the self-employed, that my prediction, and I'll put my head above the parapet and say my prediction about 1920 thankfully became true, and those people who were not eligible initially for the self-employed grant then became eligible. But again, devil's in the detail, which we'll go through in a moment. Having explored that, we're going to look at tax. Now, I'm not going to repeat every single line of tax, by the way. I'm just going to focus on the key ones as far as I'm concerned that affect you as business owners, you as self-employed. What's the tax rates going to look like now, and what are they going to look like over the next few years? And then, what do we need to do as business owners? Well, obviously, we can look at them passively. I'm a big fan of planning, looking ahead. So we're going to factor these variables in. One thing I can tell you is that it's going to be interesting. There's going to be a lot of bottom clenching. There are no immediate tax rises, but this is politician speak. There are indirect tax rises, i.e. there are going to be tax rises that will affect everybody in the short term and in the long term, and we're going to have a look at that and how that factors in to our planning and running our businesses. All the technical stuff, by the way, that I might refer to in the course of this presentation, please do check out our website. If you go into there, I've published previous broadcasts on there. They're accessible. You've got obviously news articles, weekly blogs that have been published. So if you've been on Mars, if you're not quite sure what these things are like, called Furlough, self-employed grant, by all means, please check them out. All the technical number crunching there will be shared with you over the next few days. But the bare bones, we're going to have a line. A lot of the rules and regulations largely remain unchanged with a few nuances. So let's crack on. Now, first group of people here, we're talking about self-employed. Now, in conversation terms, everybody, when we talk about self-employed, I refer to myself as self-employed. I run a company as well as a sole practice. I've got lots of clients, friends of mine who call them self-employed. And in conversation terms, self-employed is just that. You know, you work for yourself. That's how it means at a very basic level. In the context of tax, in the context of grants, we're talking about those businesses, your businesses, if you run it as an individual, even if you've got a group of people you work with as partners, if it's not a limited company, then you are self-employed. If you're a property investor, even I think you're self-employed, but the tax office don't recognise you as such. So we're talking about when you complete your personal tax return, do you complete a section in your tax return that's orange in colour, it's got self-employed in there? If the answer is yes, then this applies to you. If you don't complete that section, so if you're a director of a company, even though it might be your own company and you are the sole employee, you are not, in the eyes of Hmrc and the government, classified as self-employed. So let's look at eligibility. Now, the good news is, and this is what I predicted, commented on, considered the unfairness. Obviously, I'm not alone. There have been many other pressure groups saying that it was unfair, that many people slipped through the nets. And if you're registered for self-employment for 1920 and you filed your tax return by the 2nd of March, tick box, you now qualify here. There are some other qualifying conditions. I'm going to remind you what those are. Largely, they remain the same as they were for 18, 19 and before taxpayers. And here's the key headlines. So number one, you've obviously got to be registered self-employed. The new bits are that if you're registered self-employed in the tax year 1920, so you started any time after the 6th of April 18, then you now become eligible. Secondly, your profits from trading, from self-employment, mustn't exceed 50 grand. If they do, you're not eligible. Now, the good thing is, Hmrc have said, if on the grounds of that, you know, you may not be eligible for 1920 because of the profit levels, they are going to look back historically. Now, here's the little bit of a twist in the tale. You've got to carry on trading in 1920, obviously. If you stop trading, you're not going to get it. And you can tend to continue to trade for the current year that we're in, 2021. Now, what will happen is, and this is where potentially some people are actually going to lose out financially compared to what they had before, and some people may actually gain as a result. Now, let's have a look at the amount. So eligibility we've talked about, and the good news is that 1920 newly registered self-employed businesses will be able to apply. If previously you haven't been able to because you registered after the 18-19 tax year, then you are in that net now and potential eligibility applies. Now, what's the amount that you're going to receive? Now, there is a cap. The maximum amount you will receive is 80% of your average profits, up to a maximum one-off grant of 7.5 grand. The grant I'm referring to, by the way, everyone, refers to grant number 4. We've had 3 previous grants, and this grant is number 4. I'm going to comment on the 5th and final grant at the end of this slide. Now, to work out your average monthly, what Hmrc will now do, they will look at 16-17 and they will include your 1920 tax return. Now, what this means is as follows. For some businesses, which are largely, shall we say, in hospitality, leisure, your 1920 tax return, and that's covering about the last month or so, where really before coronavirus took its hold on the economy, it may be that you've ended up having to give deposits back, you've had to refund money, and that's been captured in the 1920 tax year. In that case, then obviously your average will be dragged down. If you've got healthy profits in 1920, then obviously overall the average will be, to your favour. But remember, the averaging calculation can span 4 tax years now, not 3. So whatever you've included in 1920 will be taken into account now to work out the average. There's nothing for you to do, by the way. Hmrc will do all the hard work, do all the number crunching, and advise by letters later on in terms of who's eligible. So the maximum grant eligible for number 4 is 7.5k, representing 3 months of average annual profits. And that's largely, by the way, in line with what we're going to talk about in a few moments on furlough. Now, the process. Now, if you haven't applied before for whatever reason, you can still apply for grant number 4. If you haven't applied before and you're not quite sure what to do, as a bare minimum, you cannot get your agent to apply for you. You must apply in your own right and capacity. So what that means is make sure you get what's called a government gateway account and get a government gateway ID. Some people are probably looking at this thinking, what on earth are you referring to, Mahmood? Again, check out previous news blogs. I'll put some links afterwards, but you need to make sure you've got a government gateway account set up. Otherwise, you will not be able to make the claim. You cannot get somebody else to do the claim for you. Technically speaking, agents are not allowed to do the claim for you. If so, that raises a flag. Your claim could be denied, and there's going to be a whole, it's just not worth it. So make the claim yourself. It is, relatively speaking, straightforward. Watch out for scammers, by the way. Unfortunately, there are some rogues out there, some nasty pieces of work who will take advantage of circumstances. Ignore any emails, phone calls from somebody purporting to be from Hmrc saying, we'll do the claim for you. So Hmrc will advise you around about April. Now, obviously, what this means is this is slightly unfair in the sense that the 4th grant is to cover the period from February, March and April. Obviously, the grant is not going to be available till around about April time. So which means that you are going to have to somehow get through to that period before the grant comes through. So if your business has been adversely affected, which is one of the conditions for the claim, then that's difficult, that's unfortunate, that's challenging. Make sure you've checked out things like universal credit. Make sure you've done a bit of a personal cash budget to navigate yourself until that claim window opens. Now, grant number 5. What I will emphasise at this stage, everybody, is the devil is in the detail. So in terms of, this is all budget announcements. This is all based on Treasury papers that I've looked at. This is all based on the information that's out there in the ether. Rishi hasn't returned my call, so I can't speak to him directly. The only thing that's certain, and this is quite, I find it quite strange or quite amusing, is that income tax has been agreed to be levied on the UK taxpayer. Now, you're probably sitting there thinking, what's this got to do with anything? Well, income tax, just to give you a historical perspective, is a tax introduced initially to fund the Napoleonic Wars. It's a temporary tax, and every year in Parliament, it has to be renewed. So that bit's done. As far as the actual Budget and the Finance Act is concerned, that is to be ratified, that is to be agreed. So this is, watch this space, keep out for the news feeds, because it may change. But as far as we know, they haven't announced the actual details and the specifics of grant number 5. What I will point out to you is the criteria is if your business has been adversely affected by coronavirus, they're looking at a figure of over 30%, then you are still eligible to get the maximum grant. If it's been affected by less than 30%, then you will have a reduced claim. Now, they haven't given us details about what are they referring to. Are they looking at profitability? Are they looking at turnover? My instinct would be a 30% drop and more gets you the maximum. Again, what's the reference point? What's the benchmarks? What's the criteria? All that sort of stuff. Watch this space, but we do know the next inequity, if you can call it that, is that the grant covers from May up to September 21. In all these schemes that have been announced, which are either an extension of or additions to, September 21 is the line in the sand where the government seems to be saying, by the way, as far as we're concerned, September 21, all financial support that you have now will be cut off. So when you do your what do I do next, when you do your planning, I would suggest that you factor in no more government support until beyond this September 21 window. So grant number 5, that will cover, as I said, that period of time up to and including September 21 from the 1st of May. So that's going to be May, June, July, August, September. That covers 5 months. That's not the same as furlough, by the way, which is a slightly different beast. But if you're self-employed, that's what you have. And my personal view would be is it unlikely there's going to be any additional funding for self-employed beyond that point of time. What we've got on this slide. Now, furlough. Largely it remains unchanged. So rules of eligibility are exactly as been previously published. Again, if you want to check out the news section on our website, we've got all the conditions there. Check out Hmrc. But in terms of you've got to have employees, so directors of their own company, that's cool. You can apply. You've obviously got to have been paying and have a registered PAYE scheme. If you don't, or you're intending to get one done, you won't be able to apply. There is some new positive changes. And remember, it's based on what's called 80% of the average regular pay. And whether you're fixed pay, variable pay, fluctuating pay, that detail, get it sorted. But here's the anchor point. Now, the headlines are as follows. I'll just summarize them into a table and go through it with you. Now, I've not included April and March 21 because nothing's changed for the existing furlough scheme. The existing current furlough scheme that we are in, that businesses are connecting to, is running up to the end of April 2021. I did hear on some broadcasts, by the way, that some people suggesting that furlough was ending in March. It doesn't. If the government hadn't announced no more initiatives, no new schemes, furlough would have still run up to April 21. So no change there. Now, let's see what happens after May 21. And it's a phased program. Now, the new news, or the good news, is for the furlough claims up to the end of April 21, for those periods covered, then you must have submitted what's called an RTI claim, which is a posh way of saying you process the payroll, you sent the report electronically to Hmrc, and they got that by the 30th of October 2020. So if you've had employees coming on the 31st of October and afterwards, then unfortunately you could not put a furlough claim in for those employees. However, now for the period from May 21, if you've taken on employees after October 20, as long as you have submitted what's called an RTI claim, which is basically a form electronic notification of Hmrc saying these are the employees, this is the PAYE issues and deductions, and you submitted that before the 2nd of March, then those employees can be added to your claim. So whereas previously you weren't able to claim for them because you took them on, say, in October, November 2020, you can now put those employees on to the furlough claim. Please remember a few things. Number one, obviously eligibility criteria. Make sure your employees are not providing services or working for you. Directors, you can still work for the company doing things like bookkeeping, administration. You can't just carry out the work of your own company for that to be eligible. Also, you can have part-time furloughing. So if somebody typically works a 30-hour week, they can work 10 hours and you can be furloughed for the 20 hours. And the claim can be made against those furloughed hours. Other things, I've seen it and I've heard of it and I've heard from other people. You cannot just say to an employee, you're on furlough. It's an agreement. So make sure your compliance is there. Make sure you send the letters out. Make sure you've got agreements. Make sure you're not breaching any contractual rules. For all our clients that we've helped with furlough claims, we've supplied standard letters and advice about how they should do those conversations, but you need to have that on file. What I would say is in terms of tailwinds, Hmrc is stepping up its compliance activity. And for those employers who innocently or otherwise have made claims under furlough, a few things to be aware of. Number one, the compliance activity is being stepped up. So make sure that the claim that you make is legitimate. Make sure you've got the records. You can't just do the claim without having the supporting documentation. If Hmrc inspects your records or asks to have a look at them, if you don't have that documentation, then technically speaking, your furlough claim could be made invalid. You'll pay that money back with fines and penalties on top of it. So again, get your house in order, get it all organised. Other things to bear aware. Since last year, Hmrc have been publishing in open space every single employee or employer, I should say, that's made a furlough claim. I had a quick look at it this morning. There's about 750,000 employers that are published there. So whether you've made a claim for a few £100s or a much larger amount, your name is published in open space. So if you're bored, you've got insomnia, go and read the Excel list. It's 750,000 approximately there. The vast majority of employers are making claims on average under 10K. It's about 85% there as well. Just thought I'd throw that stat in. Now let's have a look at the claim. Up to June 21, you can claim 80% of somebody's in regular wage, and thereafter it gets tapered down. So in July 21, the government will give you a grant of 70. You have to make up the other 10%. So the employee must still receive 80% of their regular wage, of which the government will contribute 70% of that, you contribute 10. Thereafter, between August and September, the government's contribution goes down to 60, and you as the employer contribute 20%. The employee still gets 80% of that regular wage. So as we can see the grant going down for each employee, the maximum grant is £2.5 grand up till June, drops to 2188 and then 1875 for August and September. The employer, you as the employer, will still have to pay any NIC due, will still have to pay any pension contributions due, but from July onwards, you'll also have to pay an additional £313 maximum and a maximum of 625 August to September. That, by the way, is pretty much what one version of the furlough scheme was last year. So those 70% and 60% of maximum contributions, really, if you've been in furlough, been operating and using the scheme since its inception, you'll be familiar with those rates. So we've dealt with the two big headlines. So furlough, self-employed grants. Now this is something called restart grants. And again, it's not for everybody, it's aimed at a particular sector. So what's the key headlines? This will be distributed from the 1st of April 2021. It is what's called rates-based. So in other words, if you work from home, unless you've got a separate business assessment for your business at home, it's unlikely you'll get anything. And I say unlikely, by the way, because they've not published the full details, but based on what's happened historically with local restriction grants and national lockdown grants and the initial rates grant, they were all based on property-based businesses. So if you work from home and your business and your home office as such is assessed separately, fine. If it's not, you won't get any of these grants. So it's properties that are rates based. They are registered with the local authority with a rates reference and number, and all of it is distributed and managed by the local authority. So for the details in your area, log onto your local authority's website. If I take Leicester as an example and other ones that I've seen, there will be a section that says something like business support there, and you'll see all the details there. I have to say, Leicester's done very well in terms of managing this. All local authorities which are managing this process, I think, have done incredibly well to initially get the infrastructure set up very quickly, if I go back to when it started. But the administration, the distribution of the grants, the details will all be done by your own local authority. Now, the grants, the restart grants, from what we know, they haven't published the details yet, by the way. So the Treasury hasn't distributed that down to local authority level. But what I can interpret and what I can see is there are two categories of businesses that the restart grants are aimed at. Now, first of all, there's what's called non-essential retail, and they haven't defined what businesses are classified as non-essential retail. There's a maximum one-off grant of £6,000, and if it's based anything like the existing restriction grants, by the way, which will be stopping from the 1st of April 21, then it will be typically based on a banding. So what's the rateable value of your property, of the place that you occupy? And the grant of 6K, the maximum, I would suggest is going to be for those businesses which are quite large and got a rateable value of £51,000 and beyond. And again, the detail hasn't been published, but I would suggest if you're budgeting and you haven't got the details there, then I would say if you've got a large business with a rateable value of 51K plus, then 6K is what you can factor in. If it's smaller, I'd probably go something like 2 and 4. But again, we'll wait and see. Now, other businesses which are classified as essential, so things like beauty businesses, gyms, property-based businesses themselves, hospitality, so restaurants, cafes, largely come into this mix. Hairdressing, beauty establishments, as I said, I would see as coming into this mix. The restart grant is slightly more generous. It's £18,000, and my view would be it's going to be based on the existing banding that's been used from the date that effectively grants were distributed out. And those bandings, by the way, have been consistent for the rates grant and for the restriction grants as well. So I see no reason why that should change. Details. The devil will be there when it's all announced. I anticipate, based on what's been published at local authority level, around about mid-March, some of the details will be distributed. The positive thing is why it's likely not to be delayed too long is because the existing infrastructure and the hard work done by local authorities has already been done. So therefore, this is another scheme. They'll still have to configure computer systems. So around about mid-March, they'll tell you what's going on. So again, just keep checking your local authority websites. And I would not jam their switchboards, by the way, with inquiries. Wait until about mid-March and then follow it up accordingly. Now, other news in the budget, of which there was plenty. Let's look at companies, mostly. Let's look at the tax rates. Now, there was a headline rates here published. Now, they talked about corporation tax rates going up. Let's put this into context. This applies from April 23 onwards, so the 1st of April 2023. If you run a limited company, then the tax rate on corporation tax profits goes to 25% if your profits, annual profits, are £250,000 a year and above. If your profits are below the 50K mark, then it's 19%. And 50K mark, generally speaking, if you're thinking about companies by this, then I normally advise clients based on how much risk you're exposed to and levels of profitability, etc., and other income. 25K is around about the tipping point to consider becoming a limited company. Again, if you want a bit more detail about that, check out a blog that I've done and calculators on forming a company and when should you do it. Again, check out the website, put it in the news section, and it's all there. Now, this taper, this takes me back. I've been involved in the world of accounts and tax for about, probably too many years, about 30 plus years here. And when I first came into tax, around about 1995, I think it was, they introduced what was called taper relief. Now, it's come back. It was abolished, phased out a few years ago, I think 2015. Don't quote me exactly what those years are, but this is, and it's been reintroduced. Now, we don't know the details. I can give you a heads up. What it means is if your company profits are between 50K and 250K, what will typically happen, you'll be paying 25% on your profits, and then it will get reduced by something called taper, or what used to be called marginal relief. So imagine it this way. If you make a 200 grand profit, your tax position to begin with will be 25% of that 200K. That's 50,000. It then says, actually, we've got to apply a wonderful little formula that says we're going to knock something off that tax bill by what's called marginal relief. If your profits are largely more towards the 250, you'll pay that approximate higher rate. If they're largely just slightly over the 50k, then the tax relief you'll get will be much larger. The actual formula was quite interesting. You didn't quite need a degree. Students, when I used to teach them, I found it quite an amusing bit to apply the taper relief. So again, watch out, but you'll find between 50 and 250, there's going to be a more complex calculation. It's not going to be quite 25, but it'll be over 19, and between 25, over 250k, 25%, up to 50k, 19%. Now, there's also this thing called super investment. This is very similar to the early days of what was called research and development credits. So if you invest in R&D, you'll be familiar with this concept here of super investment. And what it says is, and this is running, by the way, for 2 years, from the 1st of April 21 up to effectively the 31st of March 23. If you make investment in what are called qualifying assets, so things typically like plant, machinery, IT equipment, then for every £100 that you spend, you will be able to deduct 130% of that figure. What that means is if you invest, let's say, £100 in what's called qualifying assets, that saves you tax of just under 25 quid, £24.70 to be exact. It's phased out at this moment, so it only applies up to March 23, which is where the new rate of corporation taxes kick in. Now, it says qualifying assets, pardon me, the legislation and the guidance notes are indicating it's things like typically plant and machinery. The things that we can exclude, I would say with some degree of confidence, things like electric cars will not be eligible. Property in itself, if it's investment property, will not qualify. Generally speaking, it's what's called qualifying trading assets. That tends to be the criteria when most of these schemes are rolled out. Now, whether that will have an effect on your business or not, all it says is if you're not eligible for this, then you still have what's called an annual investment allowance up to £1 million. So basically, if you invest in plant machinery, if it's got a commercial rationale, tax might make that decision slightly easier. I will point out, by the way, everyone, this is only available to companies. So if you're a sole trader, if your business is not a company, of which there are still substantial self-employed businesses, by the way, that generate more than 50k, then if you make investments in qualifying assets, you do not get this tax relief. It's only available to corporate entities. Positive good news, perhaps, something called loss relief. Now, this is something that applies to both companies and to sole traders as well. Now, it applies for the year 2021 and 21-22. If you've made losses in that year, now normally you're only allowed to carry the losses back 1 year. If you're a company, that's now been extended and you can go back 3 years to make that loss relief claim. If you're a sole trader and you make a loss in any of those 2 tax years, you can carry it back 3 years. Now, that may or may not be a good thing, because if you're a new business startup, you've got much more flexibility in loss reliefs anyway. You can go back effectively 3 years anyhow. But if you're an established self-employed business, then you can carry that loss back up to 3 years. Again, whether it's a good thing or a bad thing, you have to see what's happened historically, but there's a bit more flexibility. Unfortunately, by the way, everyone, if you're a cash business, i.e. you do your accounts on a cash basis, which a lot of people do, you will not be able to claim this new loss relief. It only applies to clients or businesses that prepare their self-employed accounts on what's called conventional and traditional lines, which we do for all our self-employed clients. So if you just purely do it on money in, money out, you won't be able to get this new loss relief claim. Now, really coming up to a conclusion now, income tax. I think it's pretty crappy what they've done, but look, you've got a big amount of government borrowing, you've got large amounts of financial support here. I think most people would have anticipated, with the extra borrowing, with all that money that's been injected into the economy to support businesses, is going to have to be clawed back somehow. So here's the headlines. Whoopee, from effectively the new tax year 2021 onwards, your personal allowance goes up by effectively £70 to 12,570, and that's an increase of 0.56%. The downside is that is frozen until April 26. Now, as a reference point, just to give you some context, RPI published at January 21 is 0.7%. So effectively, what this is going to mean for your going forward is that most of you, where you would have had tax allowances going up consistently, effectively, this is potentially going to mean more tax will be paid. And I would say, even if your profit stabilized each year, there's going to be an impact. Now, here's for me the additional sort of red light you've got to be careful of. Now, the higher rate threshold, so at the moment, if your total income is up to 50k, you are what's called a basic rate taxpayer. So you pay tax at a top rate, 20%. National insurance, if you're self-employed, is 9%. Now, from April 21 onwards, that higher rate threshold goes up to 270, which is roughly speaking the same as it was for the allowances, 0.54%. Now, what this means is, in reality, depending on your business performance going forward for the next few years, because the threshold is restricted, more and more people are going to become higher rate taxpayers. If you get wage rises as an employee, well, you're going to be pushed into the higher rate tax bracket potentially, or more likely to be. If you're self-employed and you've got income from other sources like property, you might have a company. As soon as you go over that 5270, then you are going to be a higher rate taxpayer. There are things you can do to mitigate, but a topic for another day. But I would certainly say for lots of individuals, lots of businesses, you're going to be in that higher rate tax band, and that's how the government will claw the money back. So no headline rates going up, like income tax going up from 20 to whatever, but it will be a tax rise indirectly. One good news, if you're what's called an additional rate payer, earning 150k plus, there's no freezing on that top rate of tax. Or there's no shift, I should say. Allowances are frozen. Lifetime allowance for pensions is frozen. You can still put 40k a year in, but the lifetime allowance is unaltered. National insurance, there's been no announcement beyond April 22. Watch this space. Obviously, once you go into the higher rate threshold, by the way, the supplement of 2% goes up automatically. IHT rates, 325 grand a year, or one off, I should say. Plus the additional for the home is frozen till April 26. So if property prices go up, assets go up in value, then you're going to be potentially squeezed by IHT. And capital gains tax allowances stay unaltered until April 26. So again, tax rises, yes, but through the methodology of allowances being frozen largely. So folks, hope you got some use from that. Obviously, do check out the weekly podcast that I do called I Hate Numbers. A bit of a clue there. Tomorrow's, by the way, is coming out on pricing services, how you do that. Check out our website for lots of free resources, calculators and the like. I will share some more news on the budget in future broadcasts. But until then, have a fantastic week and see you guys on the other side. And let's go out there.